How's it going? Welcome back. It's Jonathan. Now you might be wondering what the hell is going on with Bitcoin. And if that's the case, well, I've got some bad news, well, some potentially bad news, and it doesn't look like the structure of Bitcoin is any longer on the upward trajectory. So what does that mean? Well, for those guys out there who have jumped into the back end where we've actually gone through and taken a look at what's the potential for this year, all I can tell you is to go back, take a look at that mass pressure chart. You know, you need to have this chart on hand all the time, because this is probably going to be your biggest and best guide for 2022. There was the potential that we were looking for a January rally before the eventual decline for this year into our eventual cycle that would play out for the 2022 period. So we need to keep that on hand. Anyone who was inside that group already would have known that my 2022 outlook was not bullish. It was in fact bearish, and my opinions for this year have continued to be on the bear side over the bull side, and that is why I had to just come out. Obviously there's a very interesting phenomenon that happens when I make these videos. There always seems to be something bad that's happening in the market whenever I make these videos. So it looks like we're getting a left translation top, potentially left translation top, where we came out of this last cycle, and now we possibly are moving up into a left translation top, which just means we're getting a left on the midpoint of this cycle, which could send us down into a right translation low. So we'll just see how that plays out. That isn't good news. Obviously, you know, let's be honest, I don't know exactly what's going to happen in Bitcoin all these times. All I do is I put all the analysis together and I form my opinion based on what I'm seeing at the time. Now I wanted to head over to the square of 9 quickly, just skip a few of these. All right, so on the square of 9, I did see that the market was bouncing around here for quite some time, and I thought that that could provide us some strength. But as soon as we get this break, you know, any break to the downside, and I really regret not putting a video out over the last couple of days, because I really wanted to highlight this and what could potentially happen if we got a break. Look, now we're seeing it in real time. The market has broken below this 45-degree angle, and it's now pushing lower. Okay, so the downside bias at the moment is definitely intact. As you can see, you know, I made the bad call in the past where we're having higher lows, higher highs, and the market sort of pushed down shortly after that. What we have seen since then, and we can definitely see since then, is that we're getting these, you know, lower highs occurring in the market with potentially, not guaranteed yet, potentially lower lows. So all I can encourage you to do, and all I can really encourage you to do, is just take a look at the roadmap, mass pressure chart that was created for this year, and just try to follow it. I've got some key dates that we're looking for this year. We've got some key dates that we've put out, so try to keep those in mind as we move through this year, and just see how the market moves in and out of those as we move through the year. Okay, so that's what's going to be important. But you'll definitely know, if you've seen that mass pressure chart already, that, you know, if you don't know what a mass pressure chart is, it's just a forecast for the year ahead. And so I put them out every single year, and you were able to see what the structure of the market was going to look like. Now, the mass pressure charts don't give us amplitude. So for example, if the mass pressure chart is doing this and the market, you know, the market does this, you know, it doesn't give us amplitude. It just gives us, you know, potential bias and directions. Okay, so that's what's important. Now, when last year's mass pressure chart was sort of giving us this sort of blow off top, and the blow off top, you know, didn't occur, you know, when we compare it to the last year's at least like the May rally, so the April-May rally, that we did not get that, you know, that significant blow off top. The market did follow the same structure though, and that's one of the key things that I've, you know, figured out with the mass pressure charts, is that it's angle, not amplitude. So that's something that we need to always keep in mind. And let's take a look through these charts, and we're going to start looking at our downward bias now. And I've already gone into greater detail on my thoughts on 2022, and if this is a, you know, a crash into, you know, the time counts that we're watching for the year, what it would look like and where that would lead. So let's take a look at a few of them. So the first one that I'm just going to look at is the Gann fans, or the, you know, the Gann squares, the 1x1 angles, etc. What we have here are 1x1 angles. So a 1x1 angle is the perfect proportion between time and price. That means when measured diagonally, the market is moving up one price point by one time point. Now that means that the market could have moved up 10 price points over 10 days, and then over another 10 days come down those price points into the 20-day period. So that means that if we were looking for perfect symmetry, the market's moved up X amount of price points, the market's moved down X amount of price points, and it's hit a 1 by 1, which means over X amount of days and an X amount of points, the market has, you know, been perfect. Now I'll show this in a couple of examples. So this starting point here, so the low here, the market moved out, and then what happened is the market broke through. So the market did not find any symmetry on that line, did not find any symmetry on that line, but here is where it found the symmetry on the 1 by 1 angle. So it moved up into it and then hit it and then moved away. Okay, so that's happened a few times along this. So we can see the symmetry on a few of these occurring, and these are just generally like where the market has hit a time and price angle perfectly. I'm trying not to go into the esoteric side of it too much, so that's why my description of it is very simple, but perfect hit, you know, these hits here are good where the market's sort of running up against this 1 by 1 angle, and then we start to get the break, and then it sort of doesn't come back up to them. So what happens in that case is then we start looking downwards, and we start to put our 1 by 1 angles on it to the downward bias. So if the market did move up, for example, I'm just, you know, these are just random lines, it could find a hit on that 1 by 1 angle and fall away. Now a lot of people don't actually know, but these, according to Gann, these are actually the true trend lines. Okay, so 1 by 1 angles are the true trend lines. You've probably seen some people draw these, and they've given different angles, and they're generally called like a Gann fan. So if I go ahead and stick on some other angles as an example, some down, some up, you'll see that depending on how quick the market is moving will depend on what angle you're putting on. Gann always looked at the 1 by 1 angle as the most significant, but we can see how the market sort of travels through this area, comes down to it, sort of comes down to it, comes down to it, sort of breaks through it, of course. But then when we get that significant break, that's when that angle obviously is no longer intact. All right, so that's just one that we're watching, this one right here. Now if I go in and see if we can put on any sharper angles, give me a second to get that up. So I've put on some sharper angles just now, and you know, we're getting a very sharp hit along this angle. The market did break above it, came just shy of the next angle before falling away. These angles, the sharper angles, are not as important to me. It just means that the velocity of the decline from a time perspective is, from a price perspective, is happening a lot quicker. So the sharper the angle, I mean, that's pretty common. You know right now that it's falling pretty quickly. Alright, so let's talk about the hardening. So I did already make a comment on this in the past, where we had a lot of people discussing, you know, cycles, and they were saying cycles is like a low to high and all that sort of stuff and blah blah blah. And what I do is I create a blend of all the cycles in Bitcoin, and I create a mass pressure chart, and you can see that mass pressure chart in the back end. I'll put the description down below on what the year is going to look like, but these are just the two hardening cycles. Okay, so what has occurred, so this is the from memory the 2013 run, and this is the 2017 run, you know, into its eventual peak. We sort of did this year get a blend of both, where we had our first initial run up like the 2013 run, and then we sort of got that repeat again. But you can definitely see that the bias based on the hardening cycles is pointing down, and regardless of, you know, any lengthening Bitcoin cycle that does eventuate, I don't really understand this lengthening theory. They keep saying that the cycle's lengthening, but to me, we got a top here on the 2013 run, we got a top here on the 2017 run, and now both of them are pointing down. And if we look at the 2021 run, we also got a top around this angle too. So I don't understand the whole lengthening cycle theory and how everyone's saying, oh, each cycle is getting longer. To me, each cycle has been exactly the same in length. Maybe I'm clueless on something, but this is what I'm seeing, and this is why I have my opinion of next year. So I've gone in and put in all the cycles for next year into what's called a mass pressure chart. You can see that in the link below, and that's going to detail now a special cycle that I believe will play out probably mid-year, probably, we don't know just yet, and we'll see how that plays out and if that cycle activates. So probably mid-year this year, where we don't get the full blown collapse that we're used to seeing, and that's mainly because of where we are in what's known as an 18.6 year cycle. Okay, now I'm not going to go into detail on what this 18.6 year cycle is, but the 18.6 year cycle governs the UK, it governs the US, and it governs Australia. Now this cycle is mostly based around our property market. So in that instance, there's obviously a little bit of education that needs to happen around this cycle, but effectively the cycle started around 2012, and if we look forward around 18 years, or if we go 18.6 years even, then we do the handy calculator. So if we start on 2011, 2012, and we go 18.6 years, it takes us to around 2030. Okay, now this is cycle theory in itself. Remember, a lot of other people are looking at tops to bottoms in cycles. Well, a cycle has a starting point and an ending point of exactly the same. So that would mean that 2030, if 2012 was the start of the cycle, start of the cycles are the bottoms, then to go forward 18.6 years, hypothetically, would be looking at another bottom. Okay, so the coronavirus crash that is happening right now, well, that had happened, sorry, during 2020 and so forth, that was what's known as the first part of the cycle. So we've moved up from 2012, let's finish this off, and we moved into our eventual peak, which was meant to occur around 2019, moved down into around the 2021, 2022 section. We got the first crash, in 2020. The market itself did move up, but this whole recessionary period generally lasts around 18 months. That's generally the case. So 1.5 years from peak to the recession ending, but in this case it looks like we're going to get the vibration, since it's a pandemic cycle at the moment, occur a bit longer, so the markets are going to remain a bit jittery. Anyway, once we get over that, we then move up into our next eventual peak, which is going to be a major bull run. So this sort of market movement here is slow and steady. This market movement here is just exorbitant. So the sort of stuff where we get slow and steady and then exorbitant, that's the same sort of thing that can happen in the Australian stock market, UK stock market, and also the property prices around the world. So property prices rising during this period is always going to be the case. If you understand the 18.6 year cycle, you should have been buying property during the coronavirus recession. That would have been the best time to actually secure property for the next run higher into its eventual peak. And if you're a speculator in property, then you'd be wanting to sell around 2025-ish, and then you'd be buying back around 2029, 2030. That's just how that cycle works. So I'm not going to go into greater detail, but if we overlay this whole theory into the Bitcoin market, and you got to remember the 18.6 year cycle, it's an external cycle, it's an external factor that impacts, different nations, different asset classes. When that activates, it's going to align perfectly with the potential Bitcoin top that may occur around 2025, 2026. Okay, so my anticipation is that this decline might not be as severe, and I'm not going to go into numbers here, but might not be as severe as what it has been in the past, and that we will get a shorter bear run this time, and then we will then overlap into that 18.6 year cycle, and that the market in the next bull run is going to be exorbitant. That is the theory that I'm running, and it's going to perfectly align the 18.6 year cycle, which is the property cycle, the stock market cycle, and the Bitcoin cycle into what is going to be one of the biggest bull runs of all time. And that is where all the money is going to be made. I don't care if it's DeFi, I don't care if it's the meta, I don't care where you're looking. All I care about is when these things are going to line up so that we can get in them. Okay, so let's just go a little closer. Now, let's be real. This structure does not look pretty. Okay, it doesn't look pretty at all. Let's get rid of this. Where what appears to be moving down, and the only thing we can do is just accept that and just see how far we're going to decline. Okay, so if we take this low down here, we take this high up here, and we divide it up, we're sort of running into periods where the market could decline. Now, if I'm going to be realistic, I don't see a reason why Bitcoin can't continue to fall. There are external factors which are going to be pushing Bitcoin lower, and I don't see why there's any reason why it can't be falling lower. I wouldn't even be surprised, I'm not saying it's guaranteed, but I wouldn't be surprised if Bitcoin over 2022 fell around to the 61.8% of the all-time range. Now the all-time range is bottom to top, that's a range divided up, and 61.8% of that is this level here, currently at 26,000. Now these lines are dynamic, they will change as Bitcoin's price moves higher and lower, higher. Lower to the downside if we're looking at the range, higher if we're looking at the all-time high aspect, okay? So where we are now in 2022, where the Bitcoin structure is right now, sure, you could argue that we still have, rising highs and, rising lows. You could argue that, but I think that we need to err to the side of caution right now over trying to dip buy every single thing that happens in the market, okay? So err to the side of caution. If you're not in the market, my best opinion and guidance would be sit on the sidelines, because it might be best to sit on the sidelines right now. If you're in the market, I would definitely be watching this low. Any break below that low could definitely send us lower, and I don't think it's going to be pretty at all. And moving forward, I think that now is the time to be saving your kitties for what could occur mid-year, where we could potentially, I'm not saying guarantee, we could potentially see a decent low, and that low might be a low that we would want to be getting in on, okay? If we look at every indicator right now, most of them are still pointing down. They're still pointing down. Our price structures, where we were looking for resistance in the markets, in fact turned into, where we were looking for support in the markets did in fact turn into resistance. We've come down and hit this blue line here, which is the 61.8% level. And I believe that 61.8% of the all-time high, not all-time range. There's the wrong code on that one. We have this one here, which is the 50% level of the move that occurred. If we go back in time, from the low of March 20 to around the top of 2021. This low here is the 50% level, and that could provide some significant resistance to the down move if it does get that low, because that is a midpoint, an emotional midpoint. So that is one low to be watching. But these are just things to be looking out for. We've moved from our equilibrium point here, and we're now moving towards the more bearish side of the VIX Fix. We're definitely away from these sell points here that were occurring. We had the market sell points in this area here, and also in this area here. My circles are definitely not on point right now, but around this area here there was guidance to sell, and definitely in this area up here guidance to sell. So we just use the same the same VIX Fix to look for guidance to buy. The equilibrium point is meant to be not the best time to buy, but a safe time to buy if we get multiple indicators. And I did say that I was topping up a few things here. Obviously those ones are being closed out now due to the recent collapse in price and stop losses, etc. So there is definitely no reason, in my opinion, to be looking to buy. This whole buy the dip strategy is gone. This elite wave structure has broken, and we probably got a shorter term wave 5 and not a longer term wave 1. But we'll have to see how it plays out, because everything in this market is definitely dynamic right now. Our cycle finder had indicated to tops potentially around now, that we had to be watching for cycles to be bottoming out, topping out, etc. So yes, that I know I'm not being very optimistic, and we're going up, because as you know, and I made a comment on before, that the market dynamic had changed. So now what I've been doing is I've been erring to the side of caution, and that has looked like the better thing to be doing. So I'll leave that with you. I seem to keep having videos made when markets are crashing, so I just have to, it's like against me to make videos on these days. But with that said, I'll leave that with you. I'll try and get in touch with you next week. I know I didn't make a video last week, which would have been perfect time to talk about that 45-degree angle that occurred in here. But with that said, play it safe, err with the side of caution. That just means stick to the sidelines. If you're not in the market, don't be looking to dip buy. This year I won't be talking about time counts, but we are running into one in probably 24 to 48 hours. So this sharp decline could change direction. I won't be talking about the mass pressure chart. I won't be talking about time counts. They're exclusive now to our back-end members, and also any in-depth forecast will be exclusive to our back-end members. I gave you my opinions and ideas in 2021. I showed you how I process the market. I'm now going to be sticking to price and pattern for the remainder of the year in here. If you want to get access to those forecasts in great depth, you need to join us, because that's the only place I'm going to be sharing that sort of information now. With that said, I will talk to you next time.